It's a quiet data week from Asia and the US, so let's look elsewhere to see which key data events will be moving and shaking currency markets this trading week. John Cairns of Rand Merchant Bank is on the line with me now. John, let's start with a quick glance back at the two-day G20 meeting in Australia. As traders review comments made by top officials at the summit, what FX response are we taking into the new trading week?
We're taking none whatsoever. There was two key comments from the G20, but both of them are completely meaningless. So the one was this new growth target where they want to generate another $2 trillion in global wealth, in global GDP, but it's not like government officials can set this target and do anything about it. So it's a meaningless target. And then the other one was this very bland comment about central bankers taking into account aspects other than their own interests. In other words, it's emerging markets pressurizing the Fed and the ECB and others to think about the repercussions for EM from policy tightening. But so it was, again, a very bland statement that's completely meaningless. It's going to change Fed policy whatsoever.
As Italy's Prime Minister Matteo Renzi unveils his cabinet and faces his first vote of confidence in the Italian Senate, what would you say to Renzi's comments that over-austerity would discourage Italy's economic revival? Will Thursday's unemployment figures highlight this? And are markets set to be plagued with further rumours of a euro exit by a member nation?
Yeah, on the austerity debate, I mean, I think that debate is now largely beyond us. Most of the periphery of Europe has already taken the hard medicine, has gone far down the road in terms of austerity, and across the Atlantic in the US, economic growth is increasing again. So I know Italy is perhaps behind the curve on that; they still need a lot of changes, but that's really on the real economic front in terms of reforms rather than the entire austerity debate itself. In the periphery and the potential breakup of the Eurozone, yes, those risks have dissipated. It's quite amazing. If you'd asked us 2 years ago, we would have said maybe a 50% probability of a Eurozone breakup, but since Draghi came out and said that the ECB would do whatever it takes to keep the Eurozone together, the risks have dropped. You see that in the peripheral yields, multi-year lows in most cases. So the risks have decreased. There is still some threat of the Eurozone crisis coming back into play, but it's certainly at the moment not an issue that the global financial markets are watching very closely at all.
Tuesday, we'll see South Africa's GDP release. Talk us through the role India is set to play in South Africa's economy, and how is the Rand responding to recent comments by the South African president that the country's economy is set to enter a new radical phase of economic transformation?
Yeah, we've got three major events in South Africa this week. So we've got the fourth quarter 2013 GDP data out tomorrow, and then we have our annual budget on Wednesday, and then we end the week with the monthly trade data on Friday. GDP, we're expecting growth in the range of 3 to 3.5% for the quarter, which is quite a nice revival after the third quarter, but really just reflects a bounce back after strike action in the third quarter. The budget's going to be the more important one. Can the government keep its fiscal targets, both for the year that it's currently completing and the target for the years ahead? South Africa's had a long track record of good fiscal management, but really needs to prove that's the case as we've had fiscal slippage in the past few years.
Sterling watchers will be trading Wednesday's revised GDP release. With last week's unemployment data showing an unexpected rise, are traders bracing themselves for further shocks?
No, I wouldn't think so. The view on the UK economy is still very bullish. I think most traders are still long sterling. I think it is, or it certainly has been a good trade. No reason to give that up at the moment. Unemployment is still very low, pushing at the original target where the BOE suggested they would raise policies. So no, I think long sterling remains a very attractive trade at this stage.
John, that's all we've got time for right now, but thank you very much for joining us, and thank you viewers for watching. I'll be back tomorrow with a look at New Zealand's inflation expectation report, but for now, it's goodbye.